BlackRock is paving the way in tokenization.
Bad I paid. No, start over from my bad.
Wait, what was that, bro? Guys, BlackRock is paving the way for tokenization of assets with their new partnership with Securitization and their new fund, BUIDL, on the Ethereum network. In this video, we're going to go through the intricacies of securitization, tokenization, the Securitize partnership, some of the other funds they have on the platform. We're going to talk about the BUIDL Fund, and then we're going to talk about what we think this means for the future of this asset class and just assets being tokenized in general. You ready?
Let's do it.
All right, so here we are on Securitize.io. Their whole goal is that they're aiming to make private market investing easier and more accessible. And the cool thing about this project, or this company, I should say, they have an app. You can do all this stuff through an app. So it says they're making real-world assets available to investors through tokenization. And we're going to get into this more, a process that registers ownership rights on the blockchain. And it allows them to offer benefits like 24/7, 365 transfers, borrowing and lending, secondary market trading, and just different cool things on chain. And as you can see here, they have the press release on the BUIDL Fund for BlackRock, and we're going to go through that last. So stick around to the end of the video. So let's start off with how it works. So they allow you to invest in private equity funds, VC funds, and these are all things that as a normal retail investor, it's hard to get access to this. And while they do still have like different credentials that you have to meet, like being an accredited investor or a qualified purchaser,
it's still not for retail.
Yeah, but they have some where the barriers to entry is a little lower than it would be if it wasn't on this website. And we're going to go through that here. Yeah, so signing up is as easy as creating an account, getting verified, and then you pretty much fund it. So they talk about no capital calls, no surprises. So it says, unlike other platforms that require you to make substantial deposits throughout the fund's life cycle, they collect your investment up front, so there's no further action required. So guys, just so you know, when you invest into a venture capital fund, normally how it works is, like you commit an amount, like let's say, oh, I'm gonna invest $10 million. And they're like, all right, so you sign something. So then they go and like get all these commitments, and then one day you'll get a call, which is a capital call, that's saying, hey, you said you're gonna do 10 million, go ahead and wire it. Sometimes people forget, sometimes they change their mind, but this one, they allow you to make the investment right when you decide versus having to make a capital call. And then it says here, they're uniquely positioned to allow investors various options for liquidity, including listing on their secondary market. And this helps you circumvent the long lockup periods that some funds have. So it's like you invest into a fund and it's a token, and instead of having to be a limited partner in that fund for however long the lockup period is, you can send those tokens somewhere else, and that investor is subject to a lockup period unless they send it to someone else. So that's one of the cool things about tokenization.
Yeah, you can look at a secondary market as like an OTC market, essentially.
All right, now let's go into the team. So it kind of gives a story on like
a little timeline of their progress and certain milestones they hit.
Yeah, and it shows the office location. So this is the team. They got a pretty stacked team. You guys feel free to like go on their LinkedIns and Google them. We're going to save you guys those details. They have their board of directors here. So part of the deal with, we're going to get into this later. Part of the deal with tokenizing BlackRock's fund is that BlackRock got to have someone from their company on their board. And if you see here, they have
former SEC.
Yep, former SEC, employees. So this guy was the former director, Division of Trading and Markets. This guy was at Barclays, Lehman Brothers. I don't know if that's something to brag about, actually.
I mean, yeah, it is, unless you were Dick Fold.
Yeah. This Donna Riddle, if I pronounced that correctly, she was at...
Donna Riddle. Sorry, Donna.
Yeah. Same shit. No, I'm just joking. She was at the World Economic Forum, Prudential, Chief Investment Officer at Prudential. That is big shit popping. Prudential is one of the largest insurance companies in the world. And she worked at the New York Commodities Exchange. Yeah, BBVA. This guy was the CEO. He was a board member at Fannie Mae. I don't know how I feel about that.
Damn, man. They might have the best team in all of blockchain right now.
Yeah, for
the most qualified.
I mean,
not the best, but
the
most.
Doing,
yeah, the most qualified for sure.
100%. And if you look at some of their investors, like I said, BlackRock made an investment in them. And part of that was putting one of their members on their board. Blockchain Capital, Morgan Stanley, Ava Labs, Blockchain.com, Coinbase Ventures, Hamilton Lane.
And these guys, I mean, hey, you can't go wrong with them.
Yeah. Oh, that's 2020,
bro.
Bro, that's 2020, bro.
Oh my God.
They got.
Why wouldn't they put this in English though? I'm not gonna.
The only fund I don't see on here is A16Z, and they're probably kicking themselves. But
man, Ripple got their foot in a little bit of everything, huh?
Yep. All right, guys, let's go and browse some of their investments so we can check out some of their funds. So it says here they got 600 million on chain, 500,000 accounts and counting, 0.5% management fee. So they are making a killing. They're making a killing. And a management fee is basically like when you invest into a hedge fund, they charge a management fee annually, regardless of the fund's performance. So like my hedge fund is 2 and 20, so I charge a 2% management fee annually, regardless of how the fund performs, and that's like for overhead and stuff like that. But with a company like this, that's this big, like even if they only had Blackrock's fund, the management fee
they're making 30 million.
It's going to be way more than the overhead.
They're making 30 million just from the management fee.
Yeah, and
if it's exactly 600 million, but it's not.
Yeah, and the CEO went on Bankless, and he was saying how like the AUM is increasing pretty much every day. So like BlackRock seeded it with 100 million, but it's way more than that now. And we're gonna pull up the on-chain wallet just to see where it's at right now.
So yeah, they cater to both institutional and retail investors, as Vince said in the beginning there. And as you can see, some of their minimum investments are 10,000. There's one for 500 at the bottom. There's one for 1,000, 1K.
Yeah, and it'll tell you investor type, qualified purchaser, retail just means. See, this minimum is only $1,000.
Yeah, exactly.
That's not bad.
And it's a treasury fund, so it's pretty safe for you, of course.
So to invest into the BlackRock fund, you have to have 5 million. This one's 10K. You got 20K. So they got some on here for pretty much everyone.
So they are.
This one's 500.
Exactly. They are truly democratizing institutional products and bringing them to us.
Yeah,
I love it.
It seems like most of them are retail. Actually, now that I look at it, yeah, retail. Accredited.
Most of them are definitely accredited or a qualified purchaser, but they definitely have.
I don't know, bro.
A good amount of retail. I mean, you could literally count them.
So, guys, and just to break down the difference between accredited and qualified purchaser. So, to be an accredited investor, you have to have a net worth of $1 million, not including your primary residence, or you had to have made $200,000 a year for the past 2 years, or $300K including your spouse. And then a qualified purchaser, you have to have a net worth of, I think, $5 million. And it's like a lot of other like regulatory things that you have to meet that, you know, maybe I'll have my lawyer buzz in and talk about that. But $5 million, you got $5 million, I'm sure you can work something out. I wonder if we can click on one of these funds and see if more stuff. Let me click on the BlackRock one. And if you want to invest into the fund, it'll say get in touch. And it looks like you'll probably end up booking a call. So you can't just go on here and invest. And if you want to invest to the retail, it goes here. Let's see, actually about cookies. You have to actually log in. And when you create a profile, they essentially KYC you. So while you can be a retail investor, you do have to jump through a few hoops, which I think is just, you know, part of the course. So, all right, so now that you know that the BlackRock fund is on Ethereum, we made a video going through like those details. So feel free to give that video a watch if you haven't. But they basically took their fund that they had, or it's not even, they took a fund they had. They seeded a new fund on Ethereum, but the process for managing the fund is kind of similar to what they were already doing. So this kind of talks about how it works. So it says, what is tokenization? It's the process of issuing a digital representation of an asset on a blockchain, and it involves converting the ownership of an asset, such as a piece of fine art, commodity, or shares in a company, into a digital token stored on the blockchain. The token represents the asset and is used to track and transfer ownership of that asset. So basically, like traditionally, like when you own something, it's like stored in our property system, like the United States American property system that, you know, we made. Watch our video on capitalism explained. We kind of went through that. But basically, we have this system that shows who owns what when, and everyone agrees on it because everyone can have access to it, and it works great. Tokenization adds another layer onto that, in the sense that it's more transparent and immutable and it can't be tampered with. So you can put any kind of asset on chain: real estate, loans, contracts, invoices, art, commodities, like they said, royalties. And some of the benefits are enhanced liquidity. So versus like trying to sell your house to like, have a realtor go and talk to people in the neighborhood or whatever, when you put something on chain, people can see it from around the world. Or I wouldn't say around the world. People can see it depending on what platform it's on and what company is representing it. You're going to have to go through some KYC, but after that, you're able to shop on things that you would normally have to go there to see it.
Essentially, I always said that tokenization takes illiquid assets and turn them into the most liquid assets pretty much overnight. And there is a step before tokenization. So just to be clear, they aren't tokenizing the assets. They're tokenizing the securities. And so I'll break down what the securitization process is once we get through this page here. So it'll be worth finishing. But yeah, I'll break that down in a sec.
Another benefit is accessibility and inclusivity. So it says here, RWA tokenization democratizes access to investment opportunities. By breaking down the barriers to entry, it enables a broader range of investors to participate in asset classes that were historically reserved for high net worth individuals or institutions. Guys, you just saw a perfect example of that with their funds and how you can have $1,000 to invest.
1,000 is crazy.
Or 500. It was one on there for 500. Without this company Securitize doing that, like maybe it was accessible, but it's not marketed.
That literally means you can go invest into this right now.
Yep. More transparent and trustworthy. We kind of just talked about that, how blockchains adds another layer. And then efficiency and cost reduction. So one of the cool things about having this BUIDL fund, we're going to get into it, but basically you buy the BUIDL token and it's pegged to the dollar. So one BUIDL token is worth $1, just for easy math sake. But this is the first time where you have the actual security, because the BUIDL token is a security, and the actual currency on the same rails. It's no silo. So this is just the beginning, and I think that's going to open up a lot of different cool things. And then they talk about the future of tokenization. 120 billion of tokenized cash is in circulation, is expected to grow 80x and reach up to 4 trillion by 2030. So yeah, guys, this is just the beginning. We're going to let JT talk about securitization.
I don't know. So why is BUIDL a security? Why is it classified as a security? And it's because what's backing their token are securities. So it's going to be 100% backed. And I'm mainly referring to the Blackrock fund here. What's backing their token are securities in the form of U.S. Treasuries and repurchase agreements. So that could be reverse repurchase agreements or just regular repurchase agreements. I actually broke down what the repo market is, how it works. Jay Manchin, go check it out. We'll pop it up right here. But anyway, so let me talk about the securitization process very simply, real quick. So securitization is basically turning an asset, like let's use real estate because it's the most simple, and you essentially group assets such as real estate together in a basket. So let's say as opposed to one home or one building, you have 10 homes or buildings. You group them together and you turn it into a marketable form of a security which bears a yield. And so it makes it an investable asset to institutions. Once you bundle those assets together, it allows you to sell them in a secondary market or an OTC, which frees up liquidity for whoever bundled those assets originally. And so what that allows them to do is go out and buy more. And so that's kind of like that revolving door capital that these institutions have access to. And once those assets are securitized, now you can go about tokenizing the basket of assets and put them on chain. And so there are two steps. You have to turn them into securities because a house is not a security. It becomes a security when it's bundled into like an MBS package or mortgage-backed securities. And then you have asset-backed securities like auto loans, credit card loans, all that good stuff. So you got asset-backed, you have mortgage-backed. Once they're bundled, like I said, you can go ahead and tokenize them, put them on chain, and that's essentially what they've done here. It's all about liquidity at the end of the day, guys. So by securitizing these assets, that adds a layer of liquidity for these companies. And then when you tokenize it, that puts the liquidity capability on steroids, essentially.
So guys, from a business standpoint, we're on there for a business side. If you're a business and you have like different assets that you want more people to be able to have access to buying, you can come to Securitize and they'll tokenize it for you. or securitize it, whatever you want to do.
Well, it's tokenization. They're tokenizing, and you can't just come to them with an asset. You have to come to them with securitized assets. So they have to bear some
kind of fund.
They have to bear some type of yield, essentially.
Yeah, and it kind of talks about what you get. So you get the support, you get the compliance. So they're already compliant. Once you come to them with your product or your securitization product, whatever it is, you're already compliant because they already have done the necessary filings and things of that nature. And then this is a cool thing here. So it says borrowing and lending. Take advantage of securitized credit to let your shareholders leverage their investments to receive loan rewards and borrow assets. So guys, you can borrow against your investments. And if you guys didn't know, you don't pay taxes on borrowed funds. So like if I'm Michael Saylor, it makes sense when he says he's never selling his Bitcoin because his buy-in price average is so low. Like at the end of the cycle, like he'll be able to borrow money off of what he bought forever and not have to pay any taxes, right? So that's just another cool thing. And you get this cool dashboard.
Looks like that digital energy is going to pay off for him.
You get this cool dashboard and you can manage all this stuff within an app. And then these are the blockchains that they're working with right now where you can essentially start up a tokenized fund. So you got Ethereum. Everyone knows Ethereum. Avalanche is cool because they have what's called subnets. So they allow you to have like your own chain within Avalanche still, but it's kind of like your own chain. But you can have like your own validators that you select. It can be permissioned or permissionless. And then Polygon is just a layer 2 that's aimed to help scale Ethereum.
And XDC, created by Zenfin, is similar to Avalanche in that it can be permissioned or permissionless. And so that's what you would call a hybrid blockchain. And I was actually going to use them years ago on a project we were working on, but we'll talk about that at a different time. And just something I want to point out, this company KKR, just so you guys know, this is also the same company that audits the Federal Reserve. And I'll drop a video on that on my page as well, so be on the lookout for that. But I mean, the partners that Securitize has secured, look, if I'm the CEO of Securitize or the founder or partner or whatever the fuck I am, I'm probably looking at this every day like, bro, look at our partners, bro.
Yeah.
Like, this is insane. So I don't know how they've managed to secure these partnerships over time, but I just want to clap it up for them because they did a good job.
They did.
And yes, I did say audit the Federal Reserve. They get audited.
All right. So for all you rascals who stuck around to the end, that was a soup and salad. Let's get into the meat and potatoes, and let's cover all the intricacies of Blackrock's Tokenized BUIDL Fund. So you go to the website, you get this cool little pop-up here. We're going to go through some of this press release and kind of just help demystify this. So if you didn't know, BUIDL stands for Blackrock USD Institutional Digital Liquidity Fund. Pretty shitty name, good acronym, BUIDL. They were saying that around ETH Denver last year. So if you want to like get more information on stuff, you can come and read this, but we're going to give you guys like the high level.
They seek to offer a stable value of $1 per token and pays daily accrued dividends directly to investors' wallets as new tokens each month. And as I mentioned earlier, the fund invests 100% of its total assets in cash, U.S. Treasury bills, and repurchase agreements, which is what they already do. And so I was kind of saying this before we started shooting, that the special thing about this fund is the tokenization aspect. Other than that, they're just doing what they already do. They're allowing for more liquidity by tokenizing. And Securitize, obviously they have retail products because of that as well. Allowing investors to earn yield while holding the token on the blockchain. Investors can transfer their tokens 24/7, 365 to other pre-approved investors, so it is fully permissioned, as we already mentioned as well. And fund participants will have flexible custody options, allowing them to choose how to hold their tokens. And I'm assuming that means off-chain or on their chain.
Essentially, this is almost like staking. Like you stake ETH and you get a yield in ETH. When you buy the BUIDL token, that's $1, you're essentially getting airdropped a dividend every month.
Which is a unique concept, thanks to tokenization.
Super unique. And the CEO said on the Bankless podcast that eventually they want to pay out those dividends block by block, because blockchain technology allows it, which is cool. And then for the part where...
What are the tax implications on airdropping dividends?
Well, it's not airdropping in the same sense in crypto because it's a security. You know what I mean? So it's probably the same thing as a tax dividend, if I had to guess. I'm not an attorney, so I could be wrong, but that's
attorneys,
what it seemed like.
leave comments in the comment section for us.
Yeah. And then it says here, investors can transfer their tokens 24/7 to other pre-approved investors. So guys, this is another cool thing of tokenization. You have the currency and the actual security on the same rail. So USDC and BUIDL are both ERC20 tokens. So we mentioned lockup periods earlier in the video. So instead of having to buy, invest into a fund and be subject to their 1 year, 5 year, 10-year lockup period, remember you have to get KYC in order to be an investor here. Anyone else who is KYC, you can send your tokens to their wallet if you wanted to, and essentially sell the tokens so you can get out of the lockup period.
Mm-hmm. And that's that freedom of using their secondary or OTC market. And it also says BlackRock Financial Management Inc., which is another subsect of BlackRock, the main company, will be the investment manager of the fund, and Bank of New York Mellon will serve as the custodian of the fund's assets and its administrator. Securitize will act as a transfer agent and tokenization platform, managing the tokenized shares and reporting on fund subscriptions, redemptions, and distributions. Securitize Markets will act as placement agent, making the fund available to eligible investors. PricewaterhouseCoopers, they're one of the big four accounting firms. PwC, if you ever see that, has been appointed as the fund's auditor for the period ending December 31, 2024. And so this kind of hammers home that comment that I made earlier about they have the most qualified team. They've thought everything through, obviously.
Yep. And then just some more stuff here. So a lot of people are saying like, oh, this is kind of like an on-chain treasury. It's not, because while BlackRock is like tokenizing this fund, it is being actively managed. So they're buying and selling different treasuries. So it's more like an on-chain money market fund more than an on-chain treasury. Because a lot of people are comparing this to Ondo and da-da-da. Ondo has nothing to do with this, guys.
Nothing. It's funny because it can kind of go either way, because, you know, it's also like they're becoming a participant in the space by So at first glance, when we first heard that BlackRock had their tokenized fund, there was a lot of speculation, even with us, on what they were going to buy, if they were going to tokenize their assets. But it's a standalone fund, it seems like. Although they already bought treasuries and they are a main player in the market, it's like this right here, it's almost like one iteration removed from a stable coin, essentially. So you can kind of go either way with that and say, they're just making a stable coin, or they created a fund. It can kind of go either way.
Yep. And then also, it says here the fund will issue shares pursuant to Rule 506C under the Securities Act of 1933. So basically, 506C, like my hedge fund is 506B. I can't market it to the general public, but I can bring on 35 non-accredited investors. 506C allows you to market your fund to the general public, which is why they have a press release. But you can only accept investments from accredited investors or more. They chose to go with qualified purchasers, which is why the minimum is $5 million, and they actually have to show proof that they are. So essentially, you're acting as a limited partner. So when you invest and you buy a BUIDL token, you actually let's say if it's $100 million worth of BUIDL tokens, which means that's $100 million because each token is $1. If you own 1 million, then you own 1% of the BUIDL funds, and that's how your airdrops or your dividends are calculated. Like you get 1% of the dividends in regards to how well that they manage the fund that they're managing. And also, a lot of people are saying like, oh, it's an ERC20 token. Can I spin up a Uniswap V3 pool? No. So remember, it's permissioned. So you can only send the funds to other permission wallets. Now, since it's on Ethereum, I don't know how they figured this part out, but I'm sure if you send it to a wallet and it's not whitelisted per se, it probably can't be accessed, or maybe it's some kind of check that goes on it to where it's not.
I mean, that's literally
because I'm sure you can send it. There has to be some way you can do something with it, but they probably just have their own checks and balances in place. That
probably some smart contract that just goes hand in hand with their permission nature.
Yeah, that
just wouldn't allow you to send it to someone who isn't a whitelisted participant of the network.
I wonder if you can make a smart contract like that, because I can send.
You can make a smart contract with anything, really.
Yeah, probably.
For sure.
Probably.
For sure.
Probably.
Can you guys make a smart contract with anything or no? Let us know in the comments.
And guys, remember when we made our first video that we referenced here, BlackRock had seeded the fund with $100 million. Now it's $288 million in the fund.
9 holders.
9 holders, 48 transfers, and you can see everything here. You can see all the transfers here, see the info on the holders. You can see their wallet addresses and what they're holding. It gives you the info, the actual contract. So for all my smart contract devs, you guys can probably read this and
Go ahead and check that out.
Yep, know how that works. So guys, in closing, we are going into the Bitcoin halving. We have a Bitcoin ETF. I was talking to one of my investors who works for Merrill Lynch. I'm not going to say his name, but even though the Bitcoin ETF is live and legal and all that stuff, Merrill Lynch, Goldman Sachs, like most of these large brokerages, they still can't recommend Bitcoin to their clients. So Larry Fink is going around trying to get people to say, hey, at least put 1% of your portfolio in crypto. This man controls most of the money in the entire world. If Larry Fink says it, it's probably going to happen eventually. He wants it to be 5%. I think that would take a few years at the least. But imagine what the price of Bitcoin will do when 1% of these Fidelity funds, Merrill Lynch, Goldman Sachs, like all these big banks and institutions, like guys, it's gonna get really crazy, and I just can't wait for the altcoins.
They're literally the government's investment bank, and I feel like it's like a case of, hey, we don't want to follow the leader right now, but because Larry Fink and BlackRock is kind of like pioneering this space right now in terms of on the institutional side, it won't be long until we start seeing others follow suit.
Won't be long now.
I don't like that.
I don't give a fuck. It's my joke.
So, let us know what you think in the comments about Securitize and their partnership with BlackRock and the Securitize platform in general. Hey, don't hold back your thoughts either. And guys, I appreciate you for watching. I'm going to let my boy here carry us out.
Yeah, guys, like he said, people don't want to be first, but they don't want to be last. And now that the big black rock is doing it,
that's pretty good.
Everyone else is going to eventually follow suit.
People don't even want to be first or last in like real life. Sometimes if you're in like a dangerous situation, hey, think about it. You want to be in the middle.
Yeah. Especially as a major institution, like their whole goal, you have to like, they think about maintenance more than gains. They're not worried about the next 10x. They just worried about not losing what they have.
Exactly.
Like Warren Buffett said, number 1 is to not lose money. The second rule, remember rule number 1.
And also, it's just a way to position themselves even further as the most powerful fund in the world.
Yep. So with that, we hope you guys enjoyed this video. If you got value, we ask that you drop a like, drop a comment, subscribe, follow both of our personal channels, J Mansion and Crypto Noah, and we'll see you in the next video. Take care.